Happy Tuesday, folks. Anthony Speciale here with Speciale Analysis, unedited and on the edge of the market. As we normally do on Tuesdays, we're going to go over our open positions that we've been monitoring. Now, I've kind of scaled down the amount of trades we're watching simply because the market is in this period of indecision. What we've been experiencing in the equity market would be considered a relief rally. I discussed this yesterday, and I'll only touch on it briefly today. So I'm not terribly fond of buying the market at this point. And I'll show you why when we look at the setups. But with that being said, the setups are what they are. I'm going to share them with you. I'm going to show you some trend favoring ones that we've been watching and some counter trend ones. Obviously, the counter trend trades involve a higher bit of risk. That's something you as a trader should be aware of, because you're always going to have these so-called gurus out there throwing you these different trade ideas at you. But if you're not on the right side of the trend, I mean, you could experience some pain wildly quickly, and we don't want that. We're trying to avoid that. So let's jump into the charts. Let's look over a few. Again, the list is a bit shorter than what we've been looking at in the past few weeks, only because, listen, mitigating risk is as important as taking advantage of opportunities. Most traders don't make money. Believe it or not, this is entertainment for a lot of people. But for me, this is about making money. This is about earning a living. This is about creating a legacy. This is about teaching people a skill that they can then pass on to their heirs and build a future off of. So first up, we're going to look at Boeing. We've been watching this now for a few weeks. This candle right here triggered our breakout. We had our stop back up here. We've advanced our stop based on this retest here of resistance, which was once support. Trade has traveled a majority of the way towards our target and then has pulled away from it with the overall relief rally. Now, just looking at the big picture here, you have an impulse correction, a bigger impulse, a little consolidation, more impulse. We were expecting a correction. What are we looking for? As long as price continues to settle below this blue channel, we're still in this trade because we don't really care how long it takes. We just want to know that we're on the right side of it. At this point, I don't think we're risking too much. We're risking approximately, let's call it 8.5% roughly. So that's not too bad. If we could get this to fall a little lower, maybe we could, move our stop a little bit deeper. But we have to give it room to breathe. The good thing is, as we can, as long as we're on the right side of the trend, if price does retrace, it's going to find resistance before it finds our stop. So we don't care as long as the price continues to close below resistance on a weekly basis and doesn't hit our stop. We're still in this trade. So it's working. We just have to be patient. This is part of being a good trader. You have to be patient. It's not always going to happen fast. Sometimes it does, but not always. Netflix, huge big sell-off, triggered by this candle here. I mean, we've been going sideways now for weeks, but we'll see what happens. We were watching this, looking for an opportunity. This did sell off a little bit, has come back. Obviously, there's some profit taking going on as people have sold this from its high back in the $700 range. We're down around $200 now, so $500 drop is super significant. And we would imagine that people are going to, take profits. I mean, you can see it here. Big sell-off, and look at how long we went sideways before we experienced another big sell-off. Perhaps we're going to go sideways for a while and then experience another big sell-off. Time will tell, but if the market does trip up and we do get the overall market to go lower, Netflix is going to likely to go with it. Our long position that we have on, Chevron Corporation, we had a buy at 159 currently with a stop at 151. We've advanced that, so we have shortened our risk. We are risking about 5%. So I can live with that. I can sleep well at night only risking 5%. So we're pretty happy with that. But, energy market is bullish right now. There is some good momentum. This should pull. We have a target, somewhere between 195 and 200 on Chevron. So it's working. Just got to be patient. Give it a chance. Could take a couple months, but that's okay. We knew that going into this. Ford Motor Car Company. Bought this on the break here. Prices fluttered around, come back, and retested this descending channel, which is going to now serve as resistance. Remember, I told you guys, the price action is going to likely, be affected by where we are buying and selling. So price came back up, tested it, has fallen from it, continues to fall from it. So as long as we stay below this descending blue channel, continue to close below it, our target is likely still in reach. So don't get deterred, just give it a chance. You have to let it breathe. You have to be patient. This is not day trading and looking for 10 ticks. This is, this is longer term swing style trading. I don't want to call it investing because we're not holding them that long, but this is longer term style swing trading. This is where you can limit your risks and get those big returns. That's the way to make money in this market. Ethereum has been selling off. Still, Bitcoin, cryptos as a whole are exhibiting, under pressure. You can see this very large channel structure we have here. If I zoom out, there's my target at 1175. Big impulse down, some consolidation here. Here's your correction, another big impulse down. So I'm expecting at least some consolidation, perhaps some correction, and then hopefully we'll push a little bit further. Understanding when you're buying the breakout, you're buying in the midst of typically the push. So you have to expect that there could be some form of correction or consolidation to follow. It's not uncommon. It's just part of the deal. You have to be patient. Let it breathe. Last but not least, we have a counter trend set up on the NASDAQ. Now, what does counter trend mean? It means that the setup is to buy the market in a down market. These do involve a higher bit of risk. Understanding you are trading against the trend. Have you ever gone in the ocean and tried to swim against the current? It can be wildly difficult and very dangerous. Understand that trading against the trend or trading against the current can also become a painful experience if you allow it to. So just keep that in mind that the NASDAQ is still in a downtrend. Here's our high. Here's our little consolidation. Here's our impulse. Here's a little more consolidation, impulse. Here's our correction. Here's our big impulse. What do we expect? We expect some type of correction. Does it come high enough to hit our target? Maybe. Does it mean it doesn't consolidate here and then fall lower? So we just need to be super aware of our counter trend trades. We want to be careful with them. It is a bit more risky, maybe for those of you who have a higher risk tolerance, or those of you who perhaps employ a shorter time frame style of trading. I look for weekly settlements, and then I look to find my stops based on daily. I use monthly trends. So I'm looking at the big picture. Maybe you're using some kind of day trading program and this information could be helpful and useful to you that said, hey, listen, I know where my support and resistance lies, and I know how to, where I want to buy the market, where I want to sell the market. But for the instance of the way I set this up, I did it on purpose to share with you, this is what a counter trend trade looks like. Now, as long as price does continue to settle above this black channel here, this could still work out. But if we get a weekly settlement below the black channel, even if we don't get stopped out, this becomes considered what's called a failed breakout. And that's when we would exit the trade for a loss and just try to move on. Obviously, we want that loss to be as little as possible. So that covers everything that we are watching this week. Again, like I said, the list may be slightly smaller only because we know at least I know that we are in a period of time that we don't necessarily want to counter trend trade. We don't want to add too many shorts in case this relief rally does work well for us. We're just going to wait for better setups. And this is typical of summertime trading. It doesn't mean that you can't trade. It just means that sometimes the market slows down a little bit. The big boys, leave Manhattan and head to the Hamptons where they have their second, third, fourth, eighth home, whatever they have, where their boats are, and they take their families and whatnot. So the market can slow down a little bit over the summer. And that may be also what we're partially starting to experience. Memorial Day is come and gone, and we look forward to Labor Day, in the coming months. So with that, guys, as always, I appreciate you being here. I appreciate you watching this video. If you learned something, if you enjoyed this ever so slightly, if I was just a little bit entertaining, if my cat entertained you just the littlest bit, and you could do me just the smallest favor, below this video you could like, share, and subscribe to the YouTube channel. I greatly appreciate it. My objective is to share this great content with as many folks as possible, 100% for free. And the only way I can do that is if you all help me by sharing and subscribing. So, again, I appreciate you all. Thank you for being here. I look forward to speaking with you tomorrow, and I wish you a beautiful and blessed day.